Hey everyone, welcome back to Talk Tickers. We usually dig into earnings calls here, but today we're going to switch gears a bit.
Yeah, we've got some breaking news out of China.
And we just had to do a deep dive on this.
It's pretty big.
So China has decided to keep its benchmark lending rates steady.
Exactly. And you know what makes this really interesting?
What's that?
The U.S. Federal Reserve, they're kind of hinting at maybe fewer interest rate cuts coming up.
So it's like the Fed's maybe easing off the gas a little bit, and China's just kind of stuck in neutral.
Yeah, something like that.
But okay, the big question here is, what does all this mean for you?
Well, see, that's the thing.
Because what happens in China, it doesn't stay in China, right?
Exactly. The global economy, it's all interconnected, you know?
Yeah.
It's like this massive tug of war. When one side pulls, everyone feels it. And right now, China's economy, well, it's kind of pulling back.
It's slowing down.
Yeah.
We've all heard about this, right?
Yeah.
That China's economy is maybe losing a little bit of steam.
Yeah.
I mean, they're still growing.
Yeah.
But it's not at the same pace as before the pandemic hit.
Right. And their GDP growth for 2023, well, it was at least 5.2%.
That's a lot lower than we were used to seeing before.
Definitely lower. And, the slowdown, it's causing some ripples.
It makes you think about that China shock back when they joined the World Trade Organization.
Oh, yeah, I remember that.
That huge wave of cheap Chinese goods that just flooded the market.
Totally disrupted everything.
Yeah, and some experts are saying we might be headed for round 2.
A China shock 2.0.
Oh, wow. That sounds kind of scary. Why are they saying that?
It all boils down to China's export strategy.
Oh.
They've been really focused on building up certain industries,
Like what kinds of industries?
things like solar panels, EV manufacturing, basically trying to become the world leader in these areas.
So they're making a big push.
A really big push.
And they're producing a lot.
Oh, yeah. Like, think about this. They have enough solar panel and battery production to potentially meet global demand, and they have the capacity to build like half the world's new vehicles.
Those are some crazy numbers.
It's a lot. And here's the thing. They're doing it all with huge government support and subsidies.
So that means they can offer lower prices than anyone else.
Exactly. And that's causing some friction with other countries.
Makes sense. Places like the U.S. and the EU.
Right. They're starting to push back.
With tariffs and trade investigations and stuff.
Exactly. It's getting intense out there.
Like everyone's trying to protect their own turf.
Exactly.
We're already seeing some action, too. Remember what happened with Brazil?
Oh, yeah?
With the steel?
Yeah. China was flooding their market with cheap steel.
And Brazil had to step in.
They imposed those import quotas and raised taxes to protect their own steel industry.
Yeah. It's getting serious.
It's starting to feel like that China shock all over again. But okay, let's talk about what's happening inside China for a minute.
Right.
This whole property market thing.
Yeah, that's a big one.
How bad is it really?
It's pretty rough. Imagine this. You buy a house for $1 million, right?
And then a few years later, it's only worth like $876,000.
Ooh, that's a big drop.
Yeah, housing prices in China have fallen by 12.4% from their peak.
It's got to hurt. People are losing a lot of money.
It's a big hit to people's wealth. And it's not just individuals feeling it.
Oh, really? Who else?
Local governments in China, they rely heavily on land sales to fund their operations.
So if the property market's tanking, they're in trouble.
Big trouble. They're facing a serious cash crunch.
So this property bubble bursting, it's messing up the government's ability to function.
It's a major concern.
That doesn't sound good.
It's not. And we're already seeing the consequences.
Like what?
Well, take Yuzhou province, for example. A state-owned firm had to step in to guarantee the debt of a struggling local government financing vehicle.
Whoa, wait, back up. What's a local government financing vehicle?
It's basically a company set up by the local government.
Oh, okay.
They use it to borrow money for big projects,
Like infrastructure and stuff.
Exactly. It's a key way they finance themselves in China.
So if those financing vehicles are struggling, the local governments are struggling.
And if local governments are struggling, the whole economy feels it.
It's like a domino effect.
Yeah, it impacts everything.
Infrastructure, spending, social services, the whole 9 yards.
It's a big deal.
Okay, so we've got a slowing economy, a risky export strategy, and a collapsing property market that's hurting local governments.
That's the situation right now.
China's got a lot on their plate.
They do. And this decision to hold interest rates steady, it tells us they're being careful.
Yeah, trying to walk a tightrope.
Exactly.
Yeah.
They need to stimulate growth, but they also don't want to make inflation worse or add more debt to the system.
It's a tough spot to be in.
Yeah, it's a tough balancing act for sure.
So what are they doing to try and boost things up at home. I know they've been talking about moving to a more consumption-driven economy,
Yeah, for years now.
trying to rely less on those exports.
That's the goal, but it's easier said than done, you know?
It doesn't seem like Chinese consumers are exactly spending a lot right now.
Kind of a paradox, isn't it?
Yeah.
They want this consumption-driven economy, but household spending, it hasn't really increased as a share of GDP.
So why are Chinese consumers holding back?
Well, there are a few reasons.
I mean, we talked about those property values going down, right? People are feeling less wealthy.
Exactly. When your house is worth less, you're not going to be as eager to go out and spend.
Makes sense.
And then there's the whole demographic thing.
Oh, yeah. China's population is aging, right?
Exactly. Older generations, they tend to save more for retirement.
So they're not spending as much on other stuff.
Right. And then you add in just the general economic uncertainty.
People are nervous.
They don't know what the future holds.
They're holding on to their money.
Exactly.
Yeah.
It all adds up to weak consumer confidence.
And the government has tried those stimulus measures, right?
They have, but they haven't been very effective.
Think about it. They've tried those trade-in programs for used cars, subsidies for home renovations, even discounts at tourist spots.
Yeah, they're trying different things.
But it doesn't seem to be working.
The numbers show it. If you look at monthly retail sales growth in China, it's way behind where it was back in 2019.
Wow.
It's a pretty clear sign that consumers are hesitant to spend.
Okay, so China's got all these internal problems, right?
Yeah, the property market, struggling consumers not spending,
And then they've got those potential trade conflicts brewing with other countries.
and a slowing economy on top of all that.
It's a lot to deal with.
It's a very complicated situation.
No easy answers.
Definitely not.
This really shows how connected everything is in the global economy.
Absolutely.
What happens over there in China affects us all.
It does, which is why it's so important to understand what's going on.
Stay informed.
Yeah, this deep dive, it's really just scratching the surface.
It definitely gives us a lot to think about. But now, for a little bit of fun.
Oh, this is my favorite part.
Time for This Is Not Financial Advice.
Let's hear it.
You always come up with some wild trade ideas.
I try my best.
So all this talk about China's economy got me thinking.
Oh, boy.
And I've got a potential trade idea here.
All right, I'm listening.
It's a little bit contrarian, though.
I like contrarian.
So we know China is trying to dominate that EV market, right?
Yeah, they're going all in.
Building up that huge manufacturing capacity.
They want to be the EV powerhouse.
Exactly. But here's the thing. What if their ambitions are a little too big?
What do you mean?
What if the global demand for EVs doesn't grow as fast as they're expecting?
That's an interesting thought.
What if they end up with a bunch of electric vehicles that nobody wants to buy?
A surplus of EVs.
An EV glut.
Okay, I see where you're going with this. So you're saying we should bet against China's EV plans.
You got it. Now the question is, how do we actually play this?
Well, we could short those Chinese EV manufacturers.
Yeah, but that seems risky.
It is. A lot of those companies are backed by the government.
They could step in and mess things up.
Exactly.
So maybe we need a more roundabout way.
Indirect approach.
What if we go long on the companies that would benefit if China's EV dominance stumbles?
Now that's clever.
Think about those established automakers who are ramping up their own EV production.
Or even the companies that supply parts for those traditional gas-powered cars.
Exactly. If Chinese EVs struggle, those companies could see a comeback.
It's a contrarian play, for sure.
And let me be clear, this is not financial advice.
Of course not. We're just brainstorming here.
Exploring different possibilities.
Just having a little fun.
That's what Talk Tickers is all about.
Oh.
But, okay, before we get too carried away with shorting the whole Chinese EV industry.
Let's step back for a second.
Yeah, let's think about the bigger picture here.
If China relying so much on exports is causing all this global tension, is there another way for them to go?
That's the big question, isn't it?
What would a less export-dependent China look like? And what would that mean for the rest of us?
They say they want to move to that consumption-driven economy, right?
They do.
So they need to find a way to get their own people spending more.
Unleash that domestic demand.
And they need to fix those problems we were talking about.
The property market, that weak consumer confidence.
And maybe they need to find new ways to grow their economy.
Ways that don't involve just flooding the world with cheap goods.
Right, maybe they could focus on developing their own services sector.
Or investing more in infrastructure and technology.
Creating better jobs within China.
Those are some interesting ideas.
But any big changes in China's economic model, they're going to have ripple effects everywhere.
For sure.
Yeah.
It's a constantly changing situation.
Nobody knows what's going to happen.
It'll be interesting to see how it all plays out.
Definitely.
And remember this deep dive. It's just a starting point.
There's a ton of information out there.
If you want to learn more,
Do your own research.
stay curious.
It's important to stay informed and be ready for anything you know. Because in this global economy, what happens in China, it affects us all.
Yeah, it really does.
So keep learning, keep asking questions, and don't be afraid to challenge what you think you know, because you never know what's going to happen next.
That's the fun part, right?
Exactly. And hey, we're here to help you figure it all out. We'll keep watching China's economy, the global reactions, all that stuff. And of course, we'll keep an eye out for any interesting trade ideas.
Always looking for those opportunities.
So make sure to tune in next time for another deep dive.
We'll be tackling a new topic.
Hopefully spark some more of those light bulb moments for you.
Until then, happy investing, everyone.
Stay curious out there.